Alright, I started it. So, yeah, guys, this is like my first, I guess, class session thing I'm trying here, but just wanted to show you like what I do on a nightly basis and what I look at to get a health check on the market, and then kind of go over how I look for setups for the day, um, and why I think day trading in general is like a better bet right now. It's obviously like a risky thing to do, but just gonna kind of cover why it's more lucrative and a better idea than swinging right now. So anyways, so like I have a watch list here that I call a market check, and it's got all of the major indices. So you got the S&P 500, the Qs, which is the tech sector, like the big stocks like Amazon, Meta, Google, yada yada yada, that stuff, right? And then IWM is your small caps. DID is the Dow Jones, so the industrials, and then you got Bitcoin and crypto. So Bitcoin is like your major, um, think of it as like the S&P for crypto, right? Like whatever Bitcoin's doing, the general crypto market will follow that. And then ETH is kind of like your alt market indicator, so you can get a feeling, because just because Bitcoin is going up, as you guys know, like doesn't mean ETH will. So they're still both tracking independently because they move slightly different. And then we have the VIX, which is your volatility index, and then VXX, which is the same thing but futures, so like forward looking. So I just kind of go through these every night, and I look at, like the time frames. I'll go straight down, right? So the daily is the first thing I always look at. I'll just kind of like see where we're at, right? So what I'm looking at here specifically is obviously Friday we got that huge bearish engulfing candle, and then I'm looking at from a technical level, like to really invalidate this move at this point, you have to completely erase this candle. So, and every time we get up into this range, we get slammed down. So obviously we're consolidating right now. But then I'll like go down to a smaller time frame and try to dissect like what's actually happening. So you guys know I'm big on technicals. And if you know anything about a descending wedge, or they'll call it like a bear flag, you can clear as day see one forming here on this time frame, like on the 4 hour. So every one of these candles is a 4 hour time period. But so we got this huge down. So I think I've showed, and you guys can chime in here that are in here. Like I think I've showed in the past, like you guys can see my screen, right?
Yeah.
Yeah.
Okay. All right. So like in the past, I've showed like a bull flag, right? As like something that looks like this, right? Like you get this pennant, and then you would get like a break here to the upside, and you could measure that move from taking this and stacking it where it breaks out, right? I've talked about that before with you guys a little bit.
Yep.
So inversely, it works the same way in a downtrend. So if you look right here, clear as day, you have this pole, right? And then a flag that you're creating over time, right? It's not like a perfect flag, which you can kind of see what I'm looking at, right? Like is this technical is like a
Yeah.
this is a descending pattern. So just like in an uptrend, you get higher highs and higher lows. When you go into a downtrend, you get lower lows and lower highs, right? So made a new low, and then we came up and we failed to make a new high on that bounce, which today we hit 670, and you guys saw like right when that happened, the market like flushed hard, right? That tells me that there's people sitting right here waiting to sell the market. And we also just failed to make a new high. So that's two technical signals telling me, uh, you know, the market wants to move lower. It has like a bearish bias is what you call it. And also on the weekly time frame, if we go all the way out, right, we made, oops, so this is what you're looking at for like farther out, right? Like and I'm not saying to take trades around this, just kind of like giving you a health check again. But so last week we made this high up here, and then on the weekly basis, like after getting that, we got this huge bearish engulfing candle. Like I said, what that means is like a big red candle that fully engulfed and closed at the bottom. That's a very negative signal, obviously. And then this week we failed to cancel it so far. So if we make it all the way to Friday and we can't sweep this high, that's another thing that's telling me like the market wants to move down from here, even on a weekly time
Even on
frame.
a week.
So these are all the things that I'm noticing from, I'm getting like echo from one of you guys, but these are all the things I'm like noticing as I'm just glancing at this. So it gives me like a bias for tomorrow, right? That doesn't mean that it has to happen, of course. Like all of this stuff is just like setting up scenarios for you to look for tomorrow, right? If you're going to try and day trade something like this. But also just to tell you what to look for in the next few weeks, as I just showed you guys. So I wouldn't be trying to swing because the market is clearly showing us like on the higher time frames that, you know, it's either going to move sideways here until it can get back above this, or it's going to sell off a little, but we don't know what it wants to do on a longer time frame, which is why swings are shit right now. And then also the VIX tells you that because whenever the VIX is elevated, like it is here, you can see it's like way up off its lows. That means the market has more like bigger intraday moves. It's more volatile, right? And it's not trending. So that's two things telling me like swing trading would be bad right now. So that's why I keep telling you guys that is there's a lot of ingredients here that are telling me that. And you also see we were in this like long ass downtrend for like a very long time. Right? You guys can see that clear as day. And then we broke that structure. And if you know anything about triangle breaks, whenever they break, they generally will test the second high of that triangle break. Now these are all like not 100% accurate, but it's like a statistics thing. So if you study technicals, which I've shared resources for, you'll see a lot of this stuff. So, but I can tell, so here's a high and here's a major level right here. So I would expect when this move is over for us to at least get up here, and we haven't made it yet. And we're holding the moving average, like we're holding this 50-day moving average. That also tells me that the VIX wants to go higher. So VIX go up, market go down, generally speaking. Not always, but most of the time. So you have all these things telling you to like the market looks weak right now, is basically what I'm getting at here. So these are all the things I'm looking at. And then in terms of trades, right, like you think about that and you say, okay, if the market was to turn down, which again, this is the S&P 500, but generally like all growth will follow that. If the market was to turn down, what are some stocks that have just absolutely cooked lately that would be prime to get smoked, right? So that's just like, this is where experience comes in, but so I would start thinking about that, and we'll get to that in a second. So anyways, this is your bear flag setting up. You're expecting a break down here, and if it breaks down, that takes you down to like the 640, 635, 640 level, which makes sense because on the longer time frame, again, another technical, we have this huge long trend line from like the last several years that we broke out of, and I told you guys when this happened that we've never broken out of this in years. So it makes sense that we're either going to fail and we're going to begin a bear market at this point, or you're going to get the break and retest at the very least, because this is a long, long trend, right? So you have all these technicals pointing to this blue line down here. It clear as day wants to go test it. So again, none of this stuff has to happen, but when you have all these things telling you that it's a high probability, then that's where your bias should lie. So that's what I'm seeing in the major market indices right now, or at least the SPY, right? And you look at the Qs, it has a very similar look because it basically is the same thing. Qs are slightly different than the S&P. Qs are all the tech names in the S&P basically. So I'm not going to go over that, but it's the same look. And then the IWM is your small caps. So these are like companies under $2 billion in market cap, right? So your shit like Serve, right? This company's not even profitable. Or like RR is a small cap, or like ASTS is a small cap, right? You notice how all these things are just ripping right now? Yeah, so we'll get to that in a second. So the IWM just broke out of all-time high. I think for like long term, this looks way better than the broader market at the moment, and it makes sense because we're cutting rates. So not really much to see here except for the long-term trade still looks really good on IWM. So that's something I mentioned like way back here to potentially get into. I don't know if anybody did, but yeah. Dow Jones, nothing really to see here. Boring, but just something to keep an eye on in terms of like how the economy is doing, because the industrial sector ties to the Dow Jones. So you can always kind of keep like a health check by looking at this chart to see how the economy is doing, but it'll generally follow the other parts of the market. So not super helpful most of the time, but still something to keep on your radar. And then you got Bitcoin, dude. Now, I don't have this chart covered, but I gotta tell you guys, I think the top might be in for this bad boy. I'm not gonna lie to you, because crypto always moves in these 4-year cycles, and literally this high right here on this date was the exact same length of the previous cycle. And we also have one, two, three times we hit this level and rejected, and every time we sold super hard. So I'm not calling the top, I'm not saying that, but the thing looks like dog shit right now. So crypto is a mess at the moment, but we'll see what happens. I mean, at this point, it's just chopping around sideways, so there's not much of a read here, but it does look pretty fucking weak, and it's up 1,000% almost since the lows. So it makes sense. But anyways, yeah, ETH, it's like the same thing. It's gonna do whatever Bitcoin does pretty much for now. So I'm not gonna spend too much time on crypto. I told you guys, it's like I just look at crypto to see if there's any good opportunity for trades, and there's just not right now. It's gonna be a mess. So anyways, that's kind of like the stuff that I look over generally each night is each of these sectors to give me an idea of what to expect tomorrow. And I can tell you the S&P in this case is telling me a lot because it clearly wants to go lower here. And I wouldn't be surprised if we come up and test this like 666 level again, this moving average, and get rejected and then come down either to the bottom of this range or push right through it and flush, which I bet you Friday would be the day if it does happen. We'll see though. So that's what I'd be watching that for. And then you guys are like, okay, so what do I do with that information? Well, again, if we think the market's going to move down, and believe me, if SPY falls, the entire market will follow, except for the stuff, like rare earth commodities that's its own world. But like most of growth stocks will follow this thing. So then you're like, think to yourself, what has run recently that's not worth shit? So I go back to serve, right? Or I go back to RR, or I go back to ASTS, and I look at each of those. So ASTS in particular, I noticed this earlier. So you got this double top, like it tried twice at this level, rejected, and then if you actually look at the buy sell bands, the daily time, right? You're way overstretched into this upper band and you're way off these moving averages. So this thing is run super far and it's losing a lot of its momentum already. You can like, on a second, I think it was on the 4 hour, I was looking at this earlier. It's overcooked and you get these divergences starting to build, like the interest on the relative strength of the stock, which this is RSI down here, is slowly diminishing at the same time that we're seeing this thing just kind of like run out of gas up here. So you have to figure interest is already fading and the stock market looks weak. Like you got a stock like this that's way stretched, like way stretched. And you put like the volume range profile on the chart. So this is like where the most shares were traded on this name, and you can see like the only real support is way down here, like $48. Like all the volume that took it up to here was super low volume, right? So your major market interest is down here in this range. So if the market was to be weak, this guy right here is like prime short material because it's currently got a market cap of $35 billion and their revenue was non-existent. So this company doesn't even make
Man,
money, right? So you got a
when
company.
when you really,
Yeah, what's up?
sorry. No, I was gonna say when you really put it all together like that and look at it, it just tells
It
you,
starts to
yeah,
draw a
it's
picture,
set
right?
up.
Now that doesn't mean that you just hop into it on blind faith, but you get these signals, right? So like I'll show you what I'd be looking at here, right? Like the absolute perfect setup on this thing if you wanted to try and go short is to let it try and come up here and test this level again. See where this bar is at, this 96, $97 level. If it comes up here in the
It's
morning and it can't even clear that, I would be like, if it's there and it's just like kind of bouncing around and you can't see it like push through that with strength, I'd be opening a put right there, like with some time on it and trying to ride that all the way down to this big, huge support bar. Because this thing is way overvalued right now, and if the market corrects, this thing is going to fall like a knife, right? And then on the flip side, you're like, okay, so when do I say the trade's failed? Well, if you clear these highs right here, you just get out, right? So if you bought like a put here for like November or something, you might lose like 5 to 10% of the contract by the time you clear these highs. And when I say clear, I mean you close a candle above these. Like in this case, a 4-hour candle closes above it. Then you'd say, okay, I'm getting out because it wants to continue. But unless that happened, I'd be in this thing and I'd be waiting for this to pull all the way back to where you see support, which again, on the daily basis, I've taught you guys about gaps before. You see this right here?
Yeah, it looks
Okay,
huge.
so your first layer of buyers are going to step in right here if that falls. That's where your first ones are going to come in. You fail that, you're coming all the way down to test this breakout, which is right here. So I'm seeing that because see, this was an area it couldn't get above for a long time, then it broke through it, right? So even if this stock wants to continue in the future, it looks like it wants to at least come retest these lows, right? So this is a super, super good short because you could get in the trade right here, and as long as you're not above, say, $99, you just hold it, right? And you wait. And if the market comes down, you got this level, which from here to here, you're going to make over 100% on that contract. And from there to here, you're going to be close to 300%. And I just know that because I know how options are priced, but I'm not going to cover that right now. But I'm telling you, you'd make a fucking bag here versus like a 10% risk to the upside, right? So they're options, they're risky, you don't know the future, but you have a setup here that's like highly in your favor to one side, right? So that would make me come to, and I talked to you guys about this like 2 days ago. I called this out. I said this is prime for a short, and I still think it is. But yeah, so I like this is what I'm looking at every night is I just think of like names that I know that are hot right now, and if the market is trying to correct, it makes sense that they're going to get whacked the hardest, right? So I look at this one. You might look at RR, which I've already been talking about. This still looks prime for it. Like we made these highs up here and it tried to rally today, got sold immediately, came right back down to these lows. So I was talking about this short days ago and it still looks good. I wouldn't be betting against this one too hard though, because this company is actually profitable, but it's still has had this run and it's building these divergences again. Those are going to play out at some point and the stock will go find support, which if I had to pick a level, I'd say like 569. This will get bought. So I wouldn't love this one right now, right? But I just look at like different things that I've been looking at. Like, and you guys have seen Austin's been killing it on puts lately, right? Well, he's doing the same thing without telling anybody. But all he's doing is looking at these stocks that have moved like crazy. And if the market looks soft, which he looks at the S&P, just like I'm showing you guys now and things like that, he'll take a short on it and just apply the rules that I teach. So that's how you can find your own trades is like literally just look at the stocks that have been running. Like Robinhood, I was gonna call this out forever ago, but I'm like scared to bet against Robinhood. But this thing clear as day told you it was gonna eat shit. So you got this high here, sold hard. You got this high here, sold even harder, right? So that's a double top, 100%. So your best play here is when you got halfway up this candle to go short and ride that sucker at least to the moving averages, which we already hit one today. So I'd expect this maybe gets some action tomorrow and gets bought for a bounce, or it'll sell through and go to the next one, right? It'll just revert to the mean. That's how stocks move. Whether they get too far up or too far down, they eventually always are mean reverting. So, I wouldn't be trying to short a company like Robinhood, personally, unless you're doing it for like intraday stuff. But in terms of a longer time frame, like betting against such a strong stock is a bad idea, which is why I didn't really give this out because like it's gonna get bought at some point. So like but for day trading, you could still look at something like this. So you guys got any questions? I know I'm like just blabbing here, but hopefully I'm giving you guys some good information. Nothing? Nobody? All right, cool.
I had to mute myself,
You're good.
spraying the filter.
You're good.
But no, like explanations like this is like it helps me a lot because I'm visual, you know.
Yeah.
Like I can read all the stuff and I try to get it, but visual is just so much better to me.
Yeah. And I'm trying to be more consistent, man. I just like
No, it's you do it on your own time.
I
I
know,
know.
but you guys are paying for it, and I want to give you the best value that I can. So I'm still working on being better at this. It's still like newish to me. I mean, hell, you were like the first one that I worked with regularly, Dylan. It was like on Facebook, we were always going back and forth.
I just had questions. I was just
Yeah,
like,
I know. I
yeah,
appreciate
like
that though.
and like eventually I'll get to a point where I start to understand this more and more to where I might try options, but
Yeah.
like I've said before, and you've seen it, I'm more of a DCA long term
Yeah,
type right
and
now. Just because,
but you've seen how effective that can be. Like it, there's nothing wrong with that. You just have to understand that there's going to be periods where you're going to be red for a while,
oh yeah,
right? Like this market, dude, when it finally does take a shit, and I don't know, I'm not saying that's going to happen now. I think we're just getting a correction here and then we're going to continue higher. But whenever this, I mean, you got companies like, okay, look at this one, dude. This is just stupid. Hold on. So this is something I really wanted to cover in this video because this is just ridiculous. So this is a quantum company. It makes no money. It's not profitable. It consistently misses earnings. It has no revenue. They're in debt, okay? And their market cap is currently $4 billion, okay? Now remember I said that. Remember I said this is a $4 billion company, all right? So that's QBTS. This is QBT. Let's see. Okay, that's a bad example. Let me show you QBTS because it's the same deal. All these quantum stocks are moving together. All right. So D-Wave Quantum. This is their headquarters. Okay. You see this like brick building and this is a bad picture, but it's you see even here in the picture like it's a dinky little old building from like the 60s. Okay. Now remember that. And they're not profitable and they don't make any money. And then the market cap here is telling you that this company right here, this little shit brick building, is worth $4 billion. So let's not overcomplicate this. Like, do you think that's true? Probably not, right? So
looks
sometimes,
good. No,
yeah. So when you have companies that don't even make any money, going from a market cap down here, this is under $1. It was under $1. October of last year was under $1. Okay, and now it is up. Rough, rough it. Wrong way.
I was gonna say I'm
20.
on my phone right now, so it's hard to see
No, I
even
know.
these numbers.
So it's 20. It's up 2,200% since October of last year. Okay, but the
Yeah.
fundamentals of the company, the true value of the company, and what they produce and what they sell has not fucking changed at all. So this is 100% hype, and momentum moves the stock. But that you guys can see just how powerful momentum can be. Like this company is garbage, yet here it is sitting way up here. But one thing I've learned from studying markets for years is that right before you get these recessions or big crashes in the market is the quantum stocks rip. It happens every fucking time. So I'm gonna take this back to a weekly, right? So ignore that data here. All right, so I don't know if this chart will actually show us. Yeah, this is bad. Let's see if we can. Uh, there's like a quantum index. I don't know what it's called. Maybe Island Q will show it. I need a company that's actually old. Okay. This kind of shows us a little bit. So, no, this chart sucks too. Oh, that's the wrong one, that's why. Sorry guys, fucking doing this on the fly. Yeah, trading view won't go back far enough. Maybe I can Google it and show you guys. Um, yeah, I don't know. I can't find a good picture quick, but take my word for it. I've studied this stuff, and what happens, and I'll find a better proof of this later, but what happens every single time you get these blow off top markets is a bunch of stocks like this just start to go ballistic because everybody's just hype and thinks the market's just going to go up forever. But particularly quantum stocks. So in the dot-com bubble, before the 2008 financial crisis, before COVID, or right after COVID when we got the stimmies and all the fucking money printing. So all the points where there's a bunch of liquidity in the market, right? Everybody starts to get like super excited about quantum. But if you know anything about quantum, you know we're nowhere fucking near it. We're not. If you actually study quantum mechanics or quantum physics, like we're not fucking even close. Okay? I don't care what you hear in the news. If you actually understand what that means, and then you see the picture of these companies, like you just know. Like my point is it's almost like a signal when you see these quantum stocks that the end is coming, and it's always held true for one reason or another. Quantum stocks blew up in the 90s. They blew up before the financial crisis. They blew up after COVID. Before you got the bear market every time. So this pattern, for whatever reason, seems to always play out where quantum stocks like go for this crazy run right before you get the blow off top in the market and then everything comes crashing down. Does that mean it's going to happen like next week or next year even? No. It could go on for a year or 2 years more maybe, right? But like it's still a signal to you to like watch out, right? Like something to be cautious of. So you keep a pulse on that. But there's a lot of signs like between the valuations on several companies, even the good companies, like you got some of these like the average valuation on the S&P right now is like 40 times earnings. And most of the time it's like 24. So we're almost at double the value. Like stocks are expensive is what that means, right? Which when they're returning consistent earnings and the company is like consistently delivering expansion and growth every quarter, right? It makes sense that that stock's going to be more expensive because it performs so well. The company is that good, right? So those companies are going to trade for a premium. But when they're all trading for a high premium, it's like, okay, the stock market's just really expensive right now. At some point, you got to rinse that, right? So there's a lot of signs telling you that it is coming, right? But that doesn't mean that it has to happen in a week or a month or a year or 2 years. Like this could go on throughout the rest of the decade. Who knows? I don't know when the top is going to happen. But when you're looking at it from a long-term standpoint, and Dylan, like I brought all this up because you mentioned you're a long-term investor, and the other day you were talking about turning off your averaging. This is why I'm explaining this to you because when this plays out, and it will, right? The market will come down 30, 40, 50, 60%. It'll blow your fucking mind when it finally happens. It's going to scare the living piss out of you. You have got to be buying the companies you believe in through that while you're down on your positions, or you're just like that's how compounding works. You have to compound through the rough times to get the better average over the long period of time, right? So
Yeah.
as a long-term investor, you should like really welcome crashes. Like you should get excited about it, and you should always have money ready for that, right? Like you notice I always keep like a good chunk of cash in my accounts. That's because you never know when you're going to get the really good opportunities, and it's good to have money for that when they come. Take the easy ones, right? Like I keep stressing Amazon because I think it is that right now. It's just going to take a minute to play out. But anyways,
Got
I'm not trying to like scare you guys and tell you that it's all over like tomorrow. This could very well go. I think it goes into the end of the year and into next year. I do. There's more positive catalyst behind everything right now than there is negative, but there's just a lot of signs that we're getting to like that euphoric point. Like I saw a thing today in the news that said a company was applying for 5x leveraged ETFs. So, like that's people gamifying the market and trying to bring more liquidity in and more gambling. Like it's not good. It's not good. And inevitably, everybody that trades on leverage will get smoked. You guys saw it with crypto on Friday. That same thing will happen to people that are trading those ETFs. So when you see them trying to okay that and bring that into the market, like that's also a sign that like, you know, people are like overly excited about the stock market right now. So that's when you get with these whipsaws to pull the leverage out. It's called valuation. That's what it's called. They suck the volatility and the volume right out of the market. But yeah, so I don't know. I know I was rambling a bit there and I kind of covered a lot of random shit, but that's kind of the point of this is I'm just trying to like give you stuff that I'm thinking about and seeing and noticing and like hopefully you guys can pick up something from it, you know?
Yeah.
So.
No. Yeah, I'll be trying to